Well, it's quite clear that we have seen since the beginning of the invasion, volatility, tensions, stress in financial markets. But I think that perhaps, the main point that I would like to stress is that this situation is not comparable to the one that we had 2 years ago. Liquidity has not disappeared from the markets, and despite the situation of tensions that we have seen in certain financial and capital markets, well, liquidity, as I have said before, has not disappeared. We are closely monitoring different financial markets. We have seen a lot of volatility, for instance, in equity markets. As well, we are also looking at what's happening with corporate bonds. In terms of corporate bonds, spreads have widened, but as I said before, liquidity has not faded out. And finally, there is a very specific market that we are looking very carefully. That is the derivative market. And mainly, one part of this derivative market is the commodity derivative market. So far, in the clearing houses, we have not seen any sort of special volatility there. All the margin calls derived from the increase in commodity prices have been honored. But we are closely monitoring the situation. And finally, in the government bond market as well, we have seen ups and downs in terms of nominal yields, but the spreads have been quite contained. So the conclusion is Russia is important in terms of energy markets, in terms of commodity prices, but in terms of the exposure of the financial sector, of the European financial sector to Russia, is not very relevant. And simultaneously, the size of the Russian economy is quite limited. It's only 2% roughly of the world economy. So the situation, perhaps the main conclusion, is that the strains and the tensions that we have seen are not comparable at all to what it happened at the beginning of the pandemic.